Hey everyone, John Henry here from School of Trade. Today we're going to be taking a look at a range breakout failure here on crude oil. Stop is going to go above the high here, and in terms of the target, I'm looking at this in terms of a bigger move. I want to catch these buyers that tried getting this breakout move to get going, and now they're seeing this form. That's going to be a big red flag for them, and their stops are probably going to be underneath this low. So that's where my target is going to go, right down here. Now, in terms of, where do I want to put my target? Do I want it on the low, a little above, a little below? We can use some different things as clues. When we went up to the highs here and they tried breaking out, they broke out that far. Right? Now, regardless of how far that actually is, I can just take this box, pop it right down in the bottom, and I know that we should break out about that far, down to 37. So my target at 38 is exactly where I want it, because now I will get filled one tick ahead of where the market is likely to go on the downside. So really good risk reward on the trade. We know that buyers are likely in this move for a couple of reasons. First of all, we've got some beautiful bull candles to the upside, but more importantly, if we look at this in terms of a range, very obvious little range here. They tried breaking down underneath the lows, they got a decent way, and then failed right back up again. A lot of times when that happens, you're going to get a continued breakout on the other end, and it's going to keep going and going and going. So when buyers see this candle right there, yeah, they may buy it. They see that one, they'll probably buy it. And they see that one, now they're definitely juiced up. The big issue here is it couldn't close above the high, and the follow through after that big, beautiful buy candle right at the top there was bearish, right? So we know that a lot of buyers are probably stuck, and their stops are going to go underneath this low down here, and that means that if we can get a stop run, we should be able to get that equivalent blow off through the highs, through the lows as well, to get that targeted around 45.38. So, and we can see a lot of buyers are probably exiting. There may even be some stops looming just underneath that candle if that's the one that they bought in on. So you may see a little bit of a pop down from that point too. But overall, we know that buyers are stuck. The stop is nice and small comparative to the target. Everything working out really well. Now we just have to wait for the sellers to show up and finish the job off and get that target down at 38. Seeing the buyers attempting to defend the moving average pullback, and they end very, very weak. I'm looking to add another contract on, just looking for a breakout move to the downside, knowing that the buyers aren't showing anything at all here. And so now that we're triggered underneath it, I don't want to see the high of that bull candle broken. So either way, even if this is a loss, the other three from the top still make this a profitable stop, which is exactly what we want when we're averaging in at a worse price like that. Now, the big thing here is the buyers, we know that they're stuck, and they're trying to defend, and they're trying and trying and trying, and you can see they hit the moving average and they tried bouncing right off of it. But the problem for them is that candle closed terribly. It couldn't even close past its halfway point, so essentially it moved up only to get sold right back down again. And even though it closed bullish, that candle formation gives us a really big clue that if it triggers down again, knowing that the buyers are still stuck, any of the remaining buyers are going to have their stops either underneath that candle because they're cutting the pain, or they're going to put it underneath the low. Either way, we get the push down, we get the breakout, and we get the targets filled to the downside with a nice little additional one right there. Beautiful move down. It's exactly what we were looking for. Fake break on the low, fake break on the high, push right back down to the low. So now we'll see if we can get another fake break on the low before we start bouncing back up again, but that's going to do it for me. So if you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com, and as always, we'll catch you next time.